Now let's talk about Sibanye-Stillwater, because as Wayne indicated, this one used to be a gold producer. Then under the CEO Neil Froneman, it started getting into platinum. Most recently, it took a huge and very bold move to buy out a US-based company with mines in Montana and various other places, which is a big palladium producer.
Yes.
And it now has a market cap of 32.3 billion rand, price earnings ratio of 35 rounds about, and a dividend yield around 4% historically. But the problem is now it's really geared up a lot. It has a debt to equity ratio or debt to EBITDA ratio of about 2.5 to 1 or something. It's really pushed the boat out.
Yeah,
is it going to win?
Look, at the end of the day, Neil Froneman will either be seen as a visionary because he bought all the platinum assets at the bottom price, at the cheapest level possible, the Rustenburg assets, these American assets now, or if the platinum price doesn't go up, he's going to be seen as a huge destroyer of value. So with Sibanye, you are buying a call option on the platinum and even more so the palladium price. So got the gold mines, and I mean, I can still remember from the early years of my investment career, he owns all the gems of the past. Driefontein, Kloof, Beatrix. These were the top. They were the top.
They were
gold
part
mines.
of Goldfields, right? They were spun off into Sibanye, and the idea was that they were not really of a high quality. But what he does is he takes things and manages them for a more short-term time frame, and therefore the profitability is good.
I can remember these were the best gold mines in the world, but obviously the ore body's depleted. But he has turned them around. So as things stand now, gold is still the biggest part of Sibanye. But the moment you start reporting for a full 12-month period, the platinum on the Stillwater side will be significantly bigger.
Well, let's see about that. So you've got, as you say, the gold business still kicking in at current gold price and rand dollars exchange rate, a solid sort of 6 or 7 billion rands of profits a year. And then the South African platinum, though, that they bought has actually done better than many would have thought.
Yes, they have
and again, it's because of his approach of instead of managing it for a 70-year lifetime, let's manage it for a 7-year lifetime or 7 months.
All the Rustenburg platinum that they bought from Anglo-Pats. So they've done that right.
People must understand the mines, though, in Montana are not like the mines here. They're not deep level, hot mines managed by people with rock drills. They're typically highly automated, managed by people using robotic drillers, and they've got PhDs in robotics in order to manage them.
And of course, now, if we just talk Stillwater now, Stillwater, big palladium producer. And the palladium price has shot up massively. I mean, it's gone up, it's doubled in 2 years. Okay, so also raised $1 billion equity, $1 billion equity, $1 billion loan. So he's properly geared on this one.
We participated in that raising of the $1 billion of equity because we followed our rights in the recent rights issue.
And they're doing a huge expansion there as well. I forget its name now, but in Stillwater, Blitz, that's right. Massive, I think I got that massive expansion. And part of that process, which is part of that acquisition, which is actually quite nice, is they got the biggest recycling operation in North America, as well as part of that. Massive. So that's quite a nice steady margin.
The share price doesn't look so marvelous, though. And since we owned them, they went as high as 30 rands a share, and then they've slumped back in recent weeks down to around 15. The all-time high, I'm sad to say, was close to $70, although maybe that was just a bit of a rush of blood to the head. So what would you do, Wayne, if you are not like us, you own some of these because you thought this sounded interesting?
In the shorter term, the high palladium price is going to generate a lot of extra profits and revenue for them, because I don't think they even anticipate it. But fundamentally, you're taking a call option on the platinum and palladium price. I think on a 10-year view, he's probably going to be right, but in the shorter term, it is such a marginal operation. It is so geared. The share price can fall dramatically if the platinum and palladium price.
But like what you were saying earlier sounds quite attractive, that even in the highest cost scenario, electric vehicles will constitute something like 1 million or a couple or 2%. And the internal combustion engines and hybrids will be like 100 million vehicles. That's a lot of platinum that's required, and we know that the fundamentals there look much better.
I mean, I looked at a whole projection of what the world's car pool is going to be. Currently, the world's car pool is 1.1 billion vehicles. Now, that's virtually exclusively internal combustion engines as we stand now. Now, even with quite optimistic growth rates for hybrids and electrics and hydrogen, the sheer size and scale of the market means that still grows for the next decade up to about 1.3 billion vehicles.
Yeah.
So there's enough demand here, even taking into account a very optimistic outlook for alternates.
Yeah.
So this isn't a demand issue, it's a supply issue.
Yeah.
And the supply issue was the above ground stocks, because we know the new supply has actually fallen back quite a bit.
And what about the Russian Norilsk mine that produces palladium as a byproduct? Is that still going?
That's still going, but the stockpiles that the Russian government owned,
Which is what you were referring to earlier.
palladium's, it's gone.
Okay, you know what? I'm going to hold on to that Sibanye-Stillwater holding and see what
I still
goes.
think it's too early, so I'll go not hot on this one.